Only 32 pages. Client agreement to dividend negotiation. So we have to achieve this, no? That's wrong, no?
Hello and welcome. You're watching the Budget Special live on Moneycontrol. I'm Sakshi Batra. Finance Minister Nirmala Sitharaman has delivered her budget speech, and to decode the budget fine print, I have with me a power-packed panel of experts. Joining me in this special discussion is Mr. Amit Singhania, partner Shardul Amarchand and Mangaldas. Mr. Divya Baveja, Head Personal Tax, Deloitte, as well as Gaurav Chaudhary, Deputy Executive Editor of Moneycontrol. Thank you, gentlemen, for joining us in this special discussion on Moneycontrol. Well, it was a 2-hour, 40-minute long speech that we heard today. By far the longest, if I'm not wrong, Gaurav?
Yes, in the last 20, 30 years, it should be the longest.
So, absolutely a lot to digest, really. But let me start with your first thoughts. How would you really describe the budget, maybe in one word or two words?
Well, to be very fair to the finance minister, it's one of the most difficult times to be the finance minister.
Yeah.
And also one of the most difficult times to present the budget. To that extent, I think she did a fairly decent job. Also, there are some very bold moves that she announced. One of those, obviously, is what she discussed in the personal income tax regime.
Yes,
and, you know, trying to overhaul it through a tidier system, what she said, and doing away with exemptions. So it is more, she's clearly encouraging more to spend rather than to save. I don't know how that's going to play out in the broader economy.
Right.
Eventually, that is something that we need to wait and watch. But the boldest move, however, is the government's decision to list life insurance
LIC.
corporations.
Yes.
And that could, the markets have reacted negatively because of two reasons. One, because there was no clear stimulus in place that was announced, and two, an LIC IPO may not be a good thing for the market because it will wipe out liquidity, and the market cap of LIC will obviously be upwards of 10 lakh crore given the holdings that they have. But what it does, however, it sets in motion a system of transparency within the government, because the red herring prospectus of LIC will be very interesting to see, and once it gets listed, as and when it gets listed, it then probably will cease to be a vehicle in the hands of the government.
Absolutely. How would you describe, Amit?
So I will wholeheartedly agree with Gaurav. It's one of the most difficult times to be the finance minister at this point of time.
Yeah.
And she has a very limited fiscal room to play with the tax rate. But whatever she has tried to do to rejig the personal taxes to a limited extent. I don't foresee that the rejig into the personal taxes is going to benefit all. But maybe the lower income class, or maybe the income up to a certain category, it is definitely going to benefit. But the most important point is the ESOP, which has been the painstaking tax regime for the salaried class. So she has tried to give some concession to the ESOPs. At least she has tried to stretch the taxation of the ESOP till the time of the liquidity.
Okay.
And also the one notable change she has done is the rationalization of the dividend distribution tax.
Right.
Because that has been causing a lot of problem with the foreign investors. Now, since the taxation has been moved from the company to the investor, they can avail the credit of the taxes. But I think that is something she could have done more by rationalizing the taxes, because with moving the point of taxation from the company to the investor, has the ability to increase the tax rate from 10% existing to 30%.
Okay. So that is something. Divya, would you agree with Amit and what he's saying? And especially, I understand that the first 2 hours were as if there was nothing coming on the tax front, but the last 40 minutes was a roll on the tax and the kind of announcements that they gave on taxes. So what would you really say on this budget speech?
See, I agree with Amit, and it's a tough time to present the budget, and there were a couple of things which were really important in terms of the fiscal deficit target, and the government had looked at that, and the fact that she said that they want to boost investments, they want to increase consumption. So therefore that was a step in the direction where they had taken away the target from 3.3 to 3.8 and then 3.5 next year. I think apart from the tax rates where there was a rejig which was needed, which is not as much as what people were expecting, but I think if we see overall, the budget is not only about taxes, it's also about the direction which the government wants to look at, whether it is aspirational India, whether it is economic development for all, or whether it is caring society. I think one needs to look at these aspects also when I look at the budget and the overall framework.
Right. So, Gaurav, would you agree that, overall, if you've leave out just the taxes bit, overall, does this budget really has in it to really push growth, which is the need of the hour?
It does, directionally it does make an intent. The government the finance minister actually did try to demonstrate her intent that the government is very keen on turning around the economy. And in the first part of the speech, which was also very long compared to, earlier speeches, there was a lot of focus on trying to, give the governments what the government believes the direction of the policy framework should be. That is why she laid out those 16-point farm sector revival package, and clearly the government has, continues to remain very pointed in its emphasis on the farm sector as well as on infrastructure. So in this budget, I would say the government has clearly, found out more space and more time for the salaried and the middle class. And also the agriculture sector as well as the middle.
So would you really say the kind of announcements and the 16-point agenda that the finance minister really talked about in the first part?
Some of those announcements are quite novel in many ways. Say, for instance, if you're talking about the village storage scheme along the highway, then if you're allowing farmers to actually store perishables there, that goes and if it's efficiently administered, it goes a long way in ensuring that farmers get a right price, because then you will not come across situations situations, as and when this scheme kicks off in its full capacity,
Yeah.
where farmers are going to dump products on highways because there is no space to store those products. So those are quite novel in many respects. And also, she did talk about how the government has actually brought about a new individual income tax regime. But the thing is that it has come with a fair degree of riders. So what happens when you opt for the previous scheme and
Exactly.
decide not to migrate to the new scheme? How do you gain and how do you lose?
Absolutely. Let's get the experts over here. Amit, how do you read this? And especially this was like a huge departure, and nobody would have really imagined something like this, especially given the kind of fiscal constraints that the government really had. The kind of revenue foregone, I'll ask you, Gaurav, later about it, the kind of revenue foregone that the government does on this kind of deductions that they have and the changes that they have done in the slabs as well. What do you really make of the kind of announcements made today in terms of the rejig of the slabs, and how does it make it different from the kind of earlier deductions that we used to have?
So, although I heard the finance minister saying that their ultimate objective is to less dependence upon the professionals in computing their taxes.
Okay.
With kind of riders which will be there into the fine prints, I think the necessity of employing a professional to file your income tax return cannot be dispensed away, at least in this particular year. Maybe once the individual has actually assessed their tax liability by computing under this slab and the optional slab, then I think the necessity of employing a professional may go away, but at least their job for this fiscal year is ensured.
All right, and I'm sure lots of viewers who are joining us live across our social media platforms, be it on Facebook and on YouTube, must be really wanting to know what really happens to their taxes. So send in your questions around the budget, use the hashtag BudgetWithMC, and we'll take them live with our experts here on this panel discussion as well. Divya, let me just ask you, how have you really assessed these two, the previous one and the the announcements that have been made today? And also please clarify about what kind of deductions really go away, because there is a whole lot of focus on whether my ATC deduction will go away. What about the HRA? Does all that go away, or it stays in the new scheme of regime as well?
Right. While the finance minister didn't specify in the speech that which deductions have gone, but what came out was that the deduction exemptions have gone away. We'll have to read the fine print to actually see what remains and what goes away. But if I were to do a quick calculation, say on 15 lakh rupees, which is what the finance minister also indicated, there was a saving of 78,000 if I were to not look at any deductions or exemptions.
Right.
But if I were to look at, say, deduction of ATC of 1,50,000 under the old regime, under the existing regime, or if I take a standard deduction of 50,000, if I were to look at these two scenarios only and compare with 15 lakhs, then clearly the proposed regime will have more savings.
Okay.
It may not be significant as 78,000 which was there, because that did not take into account the deduction under ATC or standard deduction.
Right.
But the saving will be there, but not as much as it would have been there earlier.
Amit, would you agree to that?
Yes, I think what the finance minister has not elaborated in her speech is regarding the deduction on account of housing loan. Because that could be the game changer. Because if you take 2 lakh rupees on the housing loan and on the new loans 1.5 lakh rupees, whether under the proposed slab, whether these two deductions has been subsumed in these slabs, so that means one cannot take the deduction under the 2 lakhs and the 1.5 lakhs regime or not, I think that could be the game changer.
Right.
If the new slabs subsume these deduction, then I think up to a certain level, these new proposed slab will be beneficial, otherwise not.
Oh, okay. So there are riders over there that we need to keep in mind.
That's why I'm saying that you need a professional now.
Okay, so nobody can file their own taxes or just calculate their own taxes. So all the CAs will be very happy, will be watching this budget today. What is the revenue foregone for the government when they do this?
So she has given the figures for revenue foregone for respective tax changes that she has announced. For the dividend distribution tax, for instance, the government is going to probably lose around 40,000 crore, and various other things. But the important point here is that she has actually, the fiscal deficit has moved. She has moved the needle on the fiscal deficit to 3.8% this year, and up 3.5% in FY21, and that is something that's a significant departure from what the medium-term fiscal policy consolidation plan was laid out when the budget was presented for the current year in July, and to what extent that is going to, whether that's going to be another step in moving is this a signal of a higher fiscal deficit for a longer period of time? That remains to be seen. And a lot of assumptions have been made on the kind of tax collections that the government is going to get this year. That is predicated upon a certain growth, and the nominal GDP growth is about 10%.
10%.
If you're assuming a nominal GDP growth of 10% in FY21, and assuming inflation remains benign, that could be a bit of a challenge. So be that as it may, a higher fiscal deficit is definitely not good news, particularly for individuals and corporate borrowers. The reason is that the days of softer monetary policy is over, because inflation is rising, and I don't think RBI is going to announce any more rate cuts. And if the government goes out and crowds out private borrowing from the market because of higher fiscal deficit, higher government borrowing, it's only going to end up raising interest rates for corporates.
Absolutely, but do you also see that, this time around we had already, or the markets had already factored in a fiscal slippage this time around, but now this has been extended to the second year as well. So two years in a row
so
we will
there
be
are two successive years where the government is unlikely to, government is going to go out in the market and borrow more. And that is not good news, because within the banking system there is only X number of money, X number of funds to lend. And that if that fund, government goes out and borrows more from that fund, that leaves the available funds for lending to corporates and individuals actually shrinks. And with more corporates and individuals, jostling over each other to get more funds, that's going to raise interest rates. That's not good news.
Absolutely. And also, do you think it is a lose-lose on both fronts? Because somewhere the markets were also factoring some bit of a 30 to 40 basis points kind of a slippage on the fiscal deficit front. And if that has really come, 3.8% was already probably factored in. But on the other hand, we were also expecting some kind of fiscal stimulus as well to pump prime the economy. So that also hasn't come. We haven't seen any increase in allocation substantially in the various sectors of the economy as well.
There are two known unknowns here, where the finance minister is expecting to give her a lot of money. One is disinvestment. The target is 2.1 lakh crore. That's double of this year. So it's from 1.05 to go to 2.1 lakh. And I presume a large part of that it's going to come from the LIC. IPO. So if the LIC IPO goes through, the government is home. But if it doesn't, then that causes a massive slippage. The other thing that needs to be seen in the fine print is how much of tax revenue the government is expecting from the telecom companies, because that's the adjusted gross revenue that the Supreme Court has ruled, and how much of revenue the government expects this year to come from telecom companies. If those come through and the disinvestment proceeds go through, that should be fine. The other known unknown lying in the detail that needs to be seen, and if it's not explicitly announced in the budget, and we need to wait and watch, is what happens. What are the kind of revenues that the government is expecting from the legacy tax dispute settlement scheme? If the government, as of now, I think there are about 6 lakh crore of existing tax disputes valued at 6 lakh crore, with more than 3 lakh number of disputes at various stages of adjudication. Even if the strike rate is about say 40%, the government could end up earning about 2 lakh crore. That should be a good sum of money. So that should take care of a lot of revenue foregone that the government will probably be able to fill. But if that doesn't come through, it could cause a bit of a challenge.
Absolutely. Now, there are lots of questions coming in especially on income tax, and that is what we really expected today. Amit, let me take this question with you. Rudradev is asking, what about senior citizens? Is there any benefit for them in the income tax or not?
So under the slab, what the finance minister has announced, there is no rejig of the slab for the senior citizen. So I'm assuming in the fine prints also, and the devil lies into the fine print, but doesn't seem to be.
So doesn't seem to be. So Rudradev must be like disappointed today. But let me ask you about markets. Fiscal deficit is definitely on one account. Markets are not happy with the kind of slippage that we have seen, and also it has missed the fiscal stimulus. But also nothing has really come on the LTCG front. We were hoping for some kind of relief to really come about there. Maybe the extension of duration, if not anything else, or not the abolishment of. Also, I'm sure like DDT is something that is a welcome move, but nothing on LTCG.
Yes, there was something which people were expecting on the long-term capital gain, but surprisingly nothing is there unless we see something in the fine print. And even DDT also is good for corporates, DDT going away, but then as Amit also said that it gets taxed in the hands of individuals at the regular slab, so the taxability goes up. Earlier if it was more than 10 lakh was 10%, now it will be slab which is there. So
Yeah, absolutely. I also wanted to ask you, Divya, you were talking about like offline before the show. So you were telling me about the change in definition of NRI. How is that really important in
This is
today's
an
context?
important change which, on a quick glance, what came out was that, so what happens is that Indian citizens or person of Indian origin who are residing overseas and when they come to visit India, so if I look at the definition of residency, the condition is 60 days in the current year and more than 365 days in the past 4 years. And people who were of Indian origin or who are of Indian origin or who are of Indian citizens, the 60 gets extended to 182 in the existing law.
Okay.
Now that has been reduced to 120, which means that the duration from 182 has gone down to 120 now. So earlier these people could come and stay in India for 6 months,
Okay.
but still qualify as non-resident, but now that threshold has gone down.
Right. Amit, you were talking about something important has really come about in the speech, and that was about the charitable institutions who are fully exempt from tax, and now taxpayers really need to file a pre-filled form, so that will be an ease for them?
Yeah, so there are two sets of amendment which has been made. One is, suppose if an individual or any donor is making a donation to a charitable institution,
Yeah.
and so for in the income tax return of the donor, there will be pre-filled entry giving the name and the amount of donation which an individual has made to a charitable institution. So because I think they want to plug the loop of the fake donation, and people
Okay.
are taking deduction on account of the fake donation, so they are trying to plug the loop on that particular aspect.
Right.
The second important one is, for the purpose of charitable institution, any registration which needs to be sought will be the electronic one. As of now, the charitable institution has to obtain the income tax exemption manually. So they want to streamline the process. That's why it has become electronic. But I think in her speech she also touched base that this particular registration will not be perpetual. It will have a shelf life of 3 years. That
Right.
needs to be seen.
Right. Divya, there was something about the affordable housing space as well, and Finance Minister did announce that, to ensure that more people really avail the benefit of the 1.5 lakh rupees home loan tax rebate, it has been increased also. The duration has been increased by 1 year. Could you
Right.
really expound upon that?
So what happened was, the current provisions say that if you have affordable housing up to 45 lakh rupees and there are certain conditions, the loan should have been taken up to 31st March 2020. Now they've extended it by 1 year to 31st March 2021. But only thing we need to see is that when the deductions which have gone away, I hope, because this forms a part of Chapter 6A deduction,
Right.
I hope this remains, or whether this has also been removed or not. Yeah.
Right, absolutely. Now, Amit, I really wanted to ask you about something more, and that was about the ESOPs, and
Yeah.
for the startup space. And I'm sure this was a very tall ask by all the startups as well, because they are taxable, and that there is some relief on that front.
Yeah, so earlier, or as of now, the ESOPs are taxed on the date of when the shares are being exercised by the employee. So on the date when the employee is exercising the shares, he is required to pay tax at the rate of 30%. Now what they have tried to do, they have actually tried to defer this point of taxation. So they have given the three conditions: either the expiry of 5 years, or as and when the employee leaves, or as and when after exercise he is going to sell it. So they are trying to defer the point of taxation to the liquidity event. So that is quite a much a relief to the taxpayer, because now they don't have to fund the tax liability from their own ordinary sources of income. They can rely upon the ESOPs to pay their tax liability of the ESOPs.
Right. Gaurav, let me bring you in. There were a whole host of announcements on the various sectors of the economy, including the sectors which have not really found so much limelight in the previous budgets, and that is probably the education sector. There's an announcement of the new policy, even the logistics policy as well. How do you read all these announcements?
Yeah, so that's what the finance minister tried to do in the first part of the speech, is to lay down basically the broad philosophy of this government's development framework, which was essentially agriculture with aspirational economic development and a caring and sharing society. And in economic development and aspiration, and aspirational aspects, a lot of focus was laid on education and skill development and health. And clearly a lot of announcements have been proposed in the budget, including new universities and also a new entrance examinations for people from Asia and Africa to come into India. So, and also FDI in education, etc. That is something that this government, it's part of was part of the BJP's to-do list when during the poll manifesto these were clearly explicitly explained, and they're going ahead and implementing these now.
Right. I also wanted to ask you about the infrastructure pipeline. Finance Minister did talk about
so that is something that the Finance Minister had announced on the last day of 2019, December 31, when she announced that 103 lakh crore worth of infrastructure projects will be implemented over the next 4 years by 2024, and part of this will be executed by the private sector, part by the government. She came out with the detailed fine print of a funding fine print of how these will be executed, how the funds will be organized, etc. And this is again, as I said, was part of the BJP's poll manifesto, and also the Prime Minister Narendra Modi in his first Independence Day speech in this current term had actually announced that the government is going to execute infrastructure projects worth 100 lakh crore over the next 5 years. And because this government believes that construction activity has strong multiplier effects, both in terms of absorption of unskilled and semi-skilled people, laborers, as well as also strong multiplier effects for intermediate sectors like cement and steel.
Right. And last question to you, Gaurav. I want to understand, I know immediately markets have given a thumbs down to the budget speech, and there were not many things that it could cheer. But in the long run, do you really feel that the markets and the Indian economy will really, cheer this budget?
The markets probably, there's a bit of an overreaction in the markets also, because there was a lot of expectations about a very upfront kind of a stimulus that did not come about. Although the dividend distribution tax and its abolition was already factored in by the markets. This is a bit of an overreaction, but we need to see how bond markets actually react on Monday, given the fiscal deficit that has been breached not just once but for 2 successive years, and the bond markets probably will take this with a degree of trepidation. All
right. Thanks a lot, Gaurav. I know that you have to leave for another very important meeting, but we'll continue our discussion with Divya and Amit. Divya, I want to understand from you, there have been several announcements, and even for the small traders, there has been an announcement and as to how, their tax relief will be increased. Could you expound upon what kind of announcements were made on that front?
So it was more in the context of, they said that because for the new company, there was provision of minimum alternate tax going away. So they have done a similar thing, AMT, for the other non-corporate, so which is a relief which is there,
Absolutely. And Amit, let me bring you in over here. There was some announcement on the taxpayer charter as well. Could you explain what that announcement was?
So I think the Finance Minister has put in the roadmap that the CBDT is going to prepare a taxpayer charter. I think the emphasis on the best practices, what a tax officer is going to follow at a time when the assessment is going on. Today we are in the e-assessment regime, so technically there is no face-to-face interaction between the taxpayer and the tax officer. But what protocol that they are required to follow in order to follow the tax recovery or any interaction with the taxpayer, either face-to-face or electronically. So that particular charter is going to give a more transparency. For example, there are stay of application demands and there is a demand recovery which needs to happen from a taxpayer. There are assessment order, thereafter there is a stay of application demand moved by the taxpayer. So those kind of things will be taken away, or rather will be catered by this particular tax charter, and this will give the best practices. We have the tax charter as of now also, but I think they are trying to improve upon it so as to bring more efficiency, more transparency, and more ease of interacting with the tax officials.
Right. There was something about faceless appeal also.
Yes. That is a very interesting thing. So I think it is on the same model of the faceless assessment. Rather, we were hoping that they will clarify the glitches into the faceless assessment and before moving to the faceless appeal.
Right.
So as I said, the devil lies into the detail. Not sure whether they have tried to address all the concerns in the faceless assessment before moving to the faceless appeal.
Right, absolutely. Divya, there was one more interesting factor in which I'm sure all the members of India Inc. will be really cheering, that there is something which the Finance Minister announced, that is, the government is really against the tax harassment. So that is something, and for the wealth creators, they really want the wealth creators to be in a comfortable position as far as tax payments are concerned. So could you explain what that announcement was really?
Yeah, so it is more to do with the context that, how they want to have ease of administration, which is very important. And some of this, I'm sure, will see light in the tax charter that we talk about. And the one step in the direction was the faceless assessment, and the faceless appeal also goes in the same direction. So I think these are the steps which government is taking to ensure that, the taxpayer's experience improves and becomes better vis-a-vis the tax authorities. So we'll have to see how it gets implemented, because that's important to, for effective implementation is important.
Right. But overall, what do you really make of the kind of tax proposals that have been included in this budget document? Do you think it will just improve the kind of, there is some consumer sentiment, the downbeat consumer sentiment that is there right now, and will it also spur demand by introducing these kind of changes in the income tax slabs also? Do you think more money will be in the hands of people? And what will be the effective rate really?
See, when I see the overall with the tax rates which have gone down, the impact will be more on the lower and the middle income group. The impact on the higher income group may not be that substantial. And as Amit also said initially, that we'll have to see which all deductions have been subsumed, which have not been subsumed, to actually see what is the net disposable increase in the hands of the individuals. So if it is not substantial, then we will not see the kind of stimulus that people were expecting, that if I have a higher disposable income, the more money goes into the market and the consumption increases. So we will have to see the fine print to understand what is the net impact and how it is going to have really an effect on the consumption or the more money coming into the economy.
Right, right. And what about you, Amit? More hits or more misses in this budget, and what was the biggest key takeaway for you?
So I think the finance minister doesn't have too much of a fiscal space to do many things out of this particular budget. And as I said, that it's a very difficult time to be a finance minister. And I completely appreciate what she has done. But on the implementation part of it, there is something that she could have done to improve the implementation of the existing laws itself, implementation of the existing statute tax laws itself, which I think has been a miss. Apart from that, I think it is quite an expected line. The DDT, the Sabka Vishwas scheme, it is quite on the expected lines.
Right. What about you? A last word from you. Biggest takeaway, and are you happy with the budget?
See, looking at the current situation, the expectations are much more, and the finance minister has tried the best to see how you can play a balancing act. So I think a step of deferring the fiscal deficit 3.8 is a step in a direction that government recognizes that yes, we need to have some more tax breaks given to individuals. So I think let's see how it progresses.
And lastly, what kind of ranking would you give to this budget out of 10? Say 1 being the lowest and 10 being the highest.
That's a tough question.
But would you pick
But if
anything?
I were to see overall, not looking at only on the tax side, but looking at the objective which the government really wants to achieve, I would say anything between 7 and 8 is what I would look at that.
Right. So what is the number that you've picked?
I would say 7 and 8.
7 and 8. Okay.
I will go with the same number, considering the economic scenario, considering the landscape, considering the constraint that she was facing. 7 and 8 is a fair rank.
All right, 7 and 8, both of our experts have actually shared the same ranking on the budget. Thank you very much, gentlemen, for sharing all these insights. And that's how the panelists have ranked the budget. We'll wrap the discussion here in Delhi, but don't go away, as we know that as the hours really pass by, and there is more to really find out in the budget document and the fine print. And therefore, my colleague Ravi Krishnan will take this discussion forward with Gaurav Kapoor, Chief Economist, IndusInd Bank, and also Manas Chakravarti, who's the consulting editor of Moneycontrol, to really understand what they really make of the budget. Over to you, Ravi.
Thank you, Sakshi. We'll continue the discussion in the financial capital. Today we have with us Gaurav Kapoor, Chief Economist at IndusInd Bank, and Manas Chakravarti, who is Group Consulting Editor with Moneycontrol. Welcome to the show, gentlemen. Gaurav, 2 days ago you wrote an article for us saying that the budget could set off a virtuous growth cycle
through investments.
Through investments. What do you think after the budget speech?
I think I'm not seen all the numbers, but from the budget itself, the capex has increased by 18%, which is more than 10% nominal growth the budget is estimating. And remember, on the spending side, 60% of the spending is committed in the form of interest payments, subsidies, salaries, defense expenditure. So capex directly from the budget is about 1.5 to 2%. And then there is, over the last 3-4 years, we've seen the capex coming from extra budgetary resources, from borrowings of the central public sector enterprises, including the railways, financing another 1.5% of GDP in terms of capex. and there are elements within the within the budget, some of the budget measures like the tax incentive for sovereign wealth funds to invest in infra projects in India. I think those are I think are positive steps. And the overall arching theme, if I take from the economic survey yesterday, that wealth creation through private participation with the trust, with hand of invisible hand of the market and invisible hand in the hand of trust. I think taking that and what the finance minister mentioned today, that economic development through greater private participation, I think it seems to suggest that going forward, public-private partnership is going to be a bigger driver of investment agenda, especially on the infrastructure side. Remember, we have a national infrastructure pipeline which was announced in December, of which where almost 30% of the funding is envisaged from the private sector. So and along with center you have states as well, and keeping in mind that there is a hard budget constraint to meet, the finance minister has used up the space available under the FRBM of 50 basis points in the current fiscal year and 50 basis points in the coming fiscal year. It is always going to be an exercise in constraint optimization. Overall, I would say that the overall estimates of the budget seem more reasonable this year. With the 10% nominal growth, 12% increase in tax, about 12% increase in taxes, so that tax buoyancy is largely along the historical lines. And ultimately, the structural issue is that our tax to GDP ratio is low, and until and unless you boost that, which involves doing especially on the GST side, taking steps to streamline the tax further so that the buoyancy from GST improves, because that starts delivering the desired tax buoyancy which was seen when the tax was implemented. And on the other side, gradually remove exemptions, tax exemptions, and what I think that's so we have done that in case of corporate taxes. Now it's been followed in the case of personal income taxes as well.
Right. So Manas, do you think the budget has done enough to push growth?
See, the whole idea of this budget is to get some confidence back into the markets, to businesses, to consumers here. So has it done that? I don't know how many times the word slowdown was used in the entire budget speech.
I don't think a single time.
No.
Yeah, so you have to acknowledge that there is a slowdown, that circumstances are different. It's not business as usual, which is why the markets are so disappointed. This budget is a business as usual budget. A tweak here, a little bit of change over there. This is fine as it goes. If it was a normal year, it's fine. But with growth at 5% this year, I would think that much more was called for. So, for example, if you want to improve confidence, what would you look at? You would A, acknowledge there's a slowdown, B, lay out the steps for the economy to go out of the slowdown. What are your plans so that we can go to higher growth? And C, can you chart out a reform path, let's say for the longer term? None of these things were done. Now, as Gaurav said, the 10% nominal growth target is very reasonable. So the good thing here is that unlike last year, which had sky high targets, this time the ambition is not so much, which is good, which means the tax harassment hopefully will also be less, because if you set too high targets and if your growth slows down, you tend to try to get as much resources as you can by hook or by crook. So that hopefully will not happen this year. But so far as growth is concerned, why are the markets down? It's just disappointment. They expected far more.
Right. But the positive thing you're saying is that the numbers are more credible this year.
It looks like it. I'll just add one small caveat. That is that we haven't really looked at the revenue estimates for the current year. Yesterday the CGA published the numbers till December. So we got to see whether these next 3 months are too optimistic or whether they also are reasonable. If they are reasonable, then I'd say the 10% growth target or the tax targets are reasonable.
I think the numbers are reasonable from what I briefly saw. Gross tax revenue collection, as per the budget estimates, between budget and revised estimates, there's a shortfall of almost 3 lakh crores. So along the expected lines.
So is the fiscal slippage also on the expected lines? The fiscal deficit.
I think fiscal deficit numbers are absolutely on the expected lines. There was there's been a lot of discussion about using the escape clause of the FRBM Act of 50 basis points over and above the fiscal deficit target. And remember, in the current year, most of the fiscal slippage is on account of an automatic slowdown in growth, and which we call an automatic stabilizer of the economy, which makes the fiscal policy counter-cyclical and not pro-cyclical. And I think that's continued into the coming year, where the initial target was 3%. It's now been raised to 3.5%. There's an overall increase in budget size of about 13%. Again, more reasonable compared to last year, which was in excess of 20%. So I think the numbers this time around seem credible. In fact, the borrowing numbers also, the net borrowings at 5,36,000 crores are actually slightly lower than expected.
Does it also indicate a greater dependency on the NSSF?
Of course it does. I mean, in the last, since the 14th Finance Commission progressively allowed states to borrow directly from the market, and since NSSF is a costlier source of funding, only a few states use that money. But there is a fairly, in any given year, in fact for this year, for the budget financing of the fiscal deficit, as against an initial target of 1,30,000 crores, the actual realized estimate, or the revised estimate, is of 2,40,000 crores. Similarly, and the same number is continued into the next year. So of the total fiscal deficit, almost 60% gets financed from market loans, including treasury bills. The rest 40 is through other sources, and I think increasingly it's through the small savings schemes, which is, I think, given the fact that that's a savings pool available for financing of the to the government, and states are not using it as actively as it was earlier. The central government is using it to finance the fiscal deficit, and in turn not putting pressure on market borrowings.
Okay. A message to our viewers: if you want to ask any questions of our experts, please share them on social media with the hashtag #BudgetWithMC.
Ravi, there's one thing I'd like to add about this fiscal deficit.
Yes.
That is that I just looked at the numbers, the revised estimates compared to the previous year's numbers, and I find in absolute terms, the increase in the fiscal deficit is much more in FY20 than is budgeted for FY21. So to that extent, the stimulus will be less in FY21 than in FY20. So this expectations which people had that this budget will deliver a stimulus to growth is not coming. At least not from the fiscal numbers. Maybe the IEBR has the extra budgetary resource may be higher,
But why do you think that is? In the sense, are they aware of the fiscal constraints, or?
I think it's a good thing. Actually, I think it's a good thing. See, you are perfectly aware that India is one of those countries which has a very high fiscal deficit, and not just the published fiscal deficit figure. If you add up all the extra budgetary resources and the states and all, some people are saying it's almost 9% of GDP or something. And we looked at the numbers the other day. Our peers like Indonesia and Malaysia and these East Asian countries, they have much lower levels of fiscal deficit to GDP. Now the argument is that since our growth is so low, therefore a bit of a stretch could be done. So I think 3.5% what they've done is decent. They have realized that you need to keep you need not go down to 3% now. You can keep the FRBM in abeyance for the time being, but don't go overboard.
Yes.
That is, I think, the via media is decent that way.
Okay. Well, a good part of this, fiscal deficit and the budget number hinges on the LIC divestment.
Right.
The divestment target has almost doubled, I think.
Yeah.
To
So for
2.1 lakh
LIC,
crores.
so for financial institutions, the number is 90,000 crores, and for strategic disinvestments is about 1,20,000 crores. So put together is about 2.1 lakh crores.
But given the government's track record in divestment, I mean, what is your?
I think in the past we've let's say the way disinvestment was being done, this was not strategic in nature. It was basically one arm of the government buying the other arm. Right? For instance, LIC buying over taking over, for instance, the IDBI Bank, or IOC taking over HPCL, I think. But there's a change clearly that the government wants to now follow a strategic disinvestment program, which they have already announced, and this is a step ahead. And LIC, I think, depending on how much the government wants to divest, I think it's in the insurance sector in the country, which is still in a fledgling stage. Remember that. I mean, our insurance penetration ratios are nowhere near Asian standards, and it's a huge market. And if you see LIC's net, their premium incomes, the first premium incomes over the years have been growing, and post demonetization even more. So I think it is a very good viable candidate for disinvestment, for unlocking the value which has been created by over the years.
Okay. So, I mean, given the personal income tax exemptions which they have planned, the increase in total receipts of the government seems to hinge on A, this LIC, and B, I mean, from the initial reading at least, an increase in import duties. Does this trend towards protectionism disturb you? And does it sit well with also the budget stated intent of Indian exporters should be part of the global value chains and so on?
Yeah, it doesn't. You have to be very selective about where to increase the customs duties, import duties. I suppose the idea is they think that Indian industry should be protected. That seems to be the idea. But I don't know. We have trodden that path before, right? And it hasn't worked out very well. So, and especially now that when there are these global value chain, and only a little part of the whole product is made in one country, it's imperative that that borders are open, because the goods go beyond borders not just once but several times, before the final product is made. So I think this tendency towards protectionism should be avoided at all costs. On the other hand, the heartening thing about the budget is actually the privatization part of it. They have said several times, even in let's say the things like cold chains and all, they've said that the PPP model should be followed, even in district hospitals, which is what it says. A, the government doesn't have money, and B, we want private sector participation in the industry. The private sector must be the engine of growth in the industry. The problem here right now is that this is more of a long-term objective, but a good objective. In the short term, the private sector doesn't have money.
And I think from taking on from what Manas is saying, and I think in general, from the budget announcement, of course, in considering the fact that the growth is expected at an 11-year low, not taking into account the numbers, the revision in the numbers yesterday, and the fact that IMF had put only a 5% probability of growth in India slipping below 5% in October. Given this kind of a scenario, the budget, there were a lot of expectations riding into this budget, especially to basically address some of the niggling issues, like for instance, in case of financial sector, in the first half of this year compared to the first half of last year, there's been a 60% decline in supply of funds for commercial activity from banking and non-banking channels. Now that is ultimately a sign of lenders' risk aversion, and that risk aversion stems from the fact that the NPA cycle continues to, we've continued to see slippages. It's extended now to the NBFC sector, and so that part was, so we were hoping that something comes out there, but nothing has. But that does not mean, let me add here, that the budget at the end of the day is an exercise in in putting out numbers of in the front of the parliament on receipts and spending. Yes, almost 13% of GDP spent, so that to large degree increases its importance. But remember, on the taxes side, with GST coming in now, a lot of these indirect tax changes are out of the ambit of the budget itself. And GST, it's the fact that GST is not stabilized, the fact that GST tax collections have been falling short, is another impediment in terms of giving, let's say, bigger tax cuts in case of private income tax, personal income taxes, where in fact now we have two regimes. Like corporate taxes, you have two regimes. Now even in personal income taxes, you have two regimes. So this is, and I don't think that that 40,000 crore number may ultimately materialize. It's still, I think, it is going to be. It remains to be seen how much of it actually materializes.
So we need to see the fine print.
Yeah, so we need to see the fine print. But the point I'm trying to make is that yes, the budget is important. Yes, the numbers are important. The credibility of fiscal consolidation process is important. Privatization, as Manas pointed out, is important. The intent behind the policy making is important, because the budget ultimately gives you a sense on what the policy makers in the government are thinking. But I don't think this stops here. I mean, we do know that slowdown is there. And I think you can, for instance, the process of privatization can be, and using the PPP model in various stages in various infrastructure sectors, can be taken forward. But for that, I think that requires policy action in each sector as well, which is I think outside the ambit of the budget itself.
Right. I mean, that's a very favorable view, because in India we always
Well, I
know
think it's a
that the
balanced
budget,
view.
Yeah, you know, it is also a place where the government states its policy. It's that occasion. So you know, fixing the financial sector was one thing which people had expected. The second area was of course rural distress. So we see that for rural development allocation has increased by 1%, while for agriculture and allied activities it has increased by around 28%. But overall, from the budget speech, Manas, do you get a sense that they have done enough to fix the rural problem? I mean, there was this long list of 16 action points and so on.
See,
But
they did quite a bit to try and fix the rural problem this year by that farm support scheme, right? Doesn't seem to have worked, or even if it works, it was not enough, you know. So then what is this one person going to do, you know? So I think the roots of this are different. Yeah. There is a problem with agriculture, is not new. It has been there for ages now. Yeah. And we all know the prescriptions. You got to increase, you know, irrigation. You go to free up markets. Same things have been said this time also. I don't think there's much new over there in this budget. Yeah.
you have anything to
And
add?
that's a state, I mean, you know, that's a subject which is a concurrent subject. You know, there've been model, for instance, there is a model land, you know, act where of contract farming, which again the states have to follow up, and the finance minister did mention in her speech. And I think ultimately schemes like PM Kisan, remember, there is the intention was to cover 14.5 crore families, but given the current you know, government infrastructure itself, they could only cover about 9.5 crore families. So that perhaps is the reason why you see a lower allocation on rural development compared to last year. Last year the allocation for PM Kisan was 87,000 crores. This year perhaps, I've not seen the numbers, I think it would have come down to 60, because in any given quarter I think not more than 10 to 12,000 crores can be disbursed in a seamless manner where you can identify the beneficiary, that it's meant, you know, the right beneficiary gets the intended payment.
Okay, okay. So we'll take one question from a viewer right now. Aritra Biswas asks, how was the budget for PSU banks? Manas, would you like to answer that?
There's nothing about recapitalizing PSU banks. There was nothing about that. So we would hope that that would be one thing. The other thing was that you must remember that while this, while the insurance cover for depositors has increased from 1 lakh to 5 lakhs, which is great for depositors, the banks will have to bear the burden of paying the premium. But I'm not sure how much of a burden that will be, but that is there. And some people were telling me that the worry for banks, not just private sector banks, public sector banks, is that because at the lower levels of income tax payment, there is now no forced need, there is no need for forced savings in insurance and things like that. So therefore banks which have insurance subsidies or which sell insurance may also be affected.
Okay, you have anything to add, Gaurav, on that?
I think there is, I mean, I largely agree with what Manas has said. I think public sector banks, there was a lot of discussion on the public sector banks in the economic survey yesterday.
Yes.
It focused more on, well, I think it focused more on you know, using fintech, for instance, for creating a more vibrant credit culture, so on and so forth. But you know, there's no talk of really beyond the mergers, which we've already seen. You know, we have there's no talk of privatization beyond
exactly.
beyond
So
IDBI.
when it comes to yielding space to the private sector, PSU banks is clearly not an area.
Are a breed apart.
Are a breed apart, exactly. And a third region where people expected something from the budget was the real estate sector. So anything that struck you?
I think thrust to affordable housing, which was reiterated. Other than that, again, I would have expected some tax incentives to allow people to, you know, the unsold inventory as per the last, you know, if you see the financial stability report of the RBI, unsold inventory is apparently now at a multi-year low.
Right.
And all you need is perhaps, so either the, you know, and the economic survey actually made a point yesterday that real estate developers should take price cuts and allow for the inventory to adjust. But I think tax incentives would have helped as well. There should have been some incentive given to allow people to kind of pick up you know, real estate assets, because remember, when we talk of a decline in our investment rate, and if you look at the breakdown of that investment rate, you will see a large part of the slowdown in investment rate is within the household sector, where you know, savings to GDP ratio has in physical assets has come down from 15 to about 10% of GDP, and which is basically because because of real estate, and real estate is one critical sector given its forward and backward linkages for the rest of the economy. So
Right. I mean, that's a good point. Savings rate has been coming down now with this new. If a lot of people shift to this new, tax regime without exemptions, do you expect savings to go down further? Will it be a structural shift over the long
not
term?
necessarily. I think the way it's done, it's from what I can, my initial thoughts is that it people with let's say income lower than 10 lakhs are the ones which will get most of the benefit, and there the propensity to consume is anyways higher. So in that sense, it allows greater consumption. Income brackets higher, then you need to get into there are we don't know what exemptions will be taken off and what's remain, but I think it may not necessarily mean that people move away from giving up those exemptions and move to the new regime. For instance, ATC itself, if I see the tax revenue foregone because of ATC as per the previous year's budget documents, was 75,000 crores, and I think a lot of that comes from people who are in a higher income tax bracket, not necessarily from people in the lower tax bracket. So I think you may not necessarily see a change and in fact that reflects in the NSSF numbers as well.
Okay, but what is your gut feel? How much is consumption going to increase because of this tax?
I think again it's not like the corporate income taxes where the initial process was to deleverage, and in case of I think it may not have a significant impact. Any which ways revenue, see if I get into a bit of the arcane part of fiscal policy, fiscal multipliers of revenue expenditure or tax cuts is lower than the capacity creation. So as I said earlier, 40,000 crore number looks on a higher side. If let's say it's lower than that, and so at 20,000 crores, let's assume it's 20,000 crores for the sake of simplicity, and in the revenue multiplier, fiscal multiplier is about 0.9, means 18,000 crores of extra spending, or propensity to consume. If you take from that 20,000 crores, let's say 70.7 or 0.8, it's about 16,000 crores of extra spending. But it does give some push. It's ultimately about sentiment, and I completely agree with Manas. I think what was required was to basically address sentiment, because I think what is important, we don't realize that getting the sentiment right is as important as actually getting some of these reforms right.
There's one thing I'd like to add about this thing about income tax. I was reading a report by Jeffries which said that even if you halve income taxes, even if you halve it, the increase in PFC, private final consumption expenditure, is 2%. 2%.
Okay.
So it doesn't matter.
So it ultimately comes to the point that our tax to GDP is about 12%, and so until and unless that goes up, you can't. And the tax base of personal income tax base is anyways relatively small.
And you're making it even smaller now with all these exemptions. Yeah.
But see, Manas, you've been writing about how demonetization and GST have hit smaller firms more, and that's one reason why growth has kind of come down. From a MSME sector point of view, apart from increasing the forbearance on their bank loans by 1 year, did you notice anything significant to pull them out of this situation?
No, I don't see anything significant. I think also, a lot of MSME growth is linked to the growth of the larger firms, because they mostly sell to the larger firms, and a lot of them are suppliers to the larger firms. So unless the economy as a whole improves, you can't just try to improve the MSME sector. Usually what happens is the bigger firms in a recovery, that's the bigger firms which do well first, which is why in the stock market it is the frontline indices which go up first, right? And only later the market as a whole goes up. Yeah.
Okay, we'll take another question from a viewer. Yusuf Kampala asks, saying that you mentioned the markets have overreacted, and which are the sectors you think will benefit in the long run? Anything?
Yeah, I think it's all about reforms at the end of the day. I think we
have we noticed any major reforms?
And I would think that from this, to me, one thing is quite clear, that we're not looking to have short-term boosts. We are the idea is to get the economy going in a, as I mentioned in my column as well, in a virtuous cycle through investments. So I think that, and that is the right approach, and I would still think sectors, and there's enough focus from the government, from its direct budget and off budget, on infrastructure, and in areas like roads, railways, airports, and for instance even asset monetization. That's a novel thing which should be, the finance minister mentioned that she will, she'll basically, I think for NHAI specifically, that's what she's planning to do. So and I think it's I think in the end of the day, I'm no equity analyst myself, but I think it's I think growth, sustainable fast growth can only be generated through higher investments. Consumption anyways, given by our own our own experience in the late 90s, Manas would recall, consumption growth takes about 2 to 3 years to pick up.
Right.
And remember, in the current, the boost we saw in consumption in around 2016-17 came on account of a couple of things. One, lower inflation because of oil prices, seventh pay commission hikes, the center and state level, and finally the fact that NBFC sectors, NBFC lending entered into the NBFCs were growing when banks were reducing their lending out. Because of the NPA issues. So now those force multipliers are oil. Oil has basically run out. It's stabilized. Pay commission is out of the way. So, and consumer sentiment is weak. So it will take time for it to recover. But ultimately, when you have constrained optimization exercise, you need to see where do you want to focus on. And I think investments and at least the going by the economic survey and the budget speech today, I think the focus on getting private sector involved,
right,
is I think is the right step, is the first right step. Now needs to be seen how it is followed up with subsequent policies.
I think one thing one can say definitely is that because of the scrapping of the dividend distribution tax, it is those sectors which pay higher dividends, for example PSUs and MNCs, which will benefit from that particular policy at least.
Okay, thanks. So that's all we have time for. Our panel agrees that the budget numbers are more credible this year and the targets are not so ambitious. The budget also has tried to put more money into the hands of consumers and tried to spur investments. But at the same time, there is no overarching vision or a long-term reform roadmap. We'll get more clarity as the fine print emerges. Thanks for viewing. Stay logged on to moneycontrol.com for further opinion and analysis. Thank you, gentlemen.